Good afternoon, ladies and gentlemen. Thank you so much for joining us for this afternoon's panel. My name is Precious Oyelade. I am the head of strategy and network at Ventures 54. We are an organization that focuses on building and strengthening the investment corridors between Africa's tech and investment ecosystem and the rest of the world. And we do that through providing access to key networks, unlocking human and commercial resources, and ensuring that people have access to investment opportunities. It's my pleasure to facilitate today's panel focused on ensuring that we understand the expanding opportunities for expanding across the continent as well as outside the continent. And so I will hand over to our illustrious panel to introduce themselves, starting with Sheshe.
Hello, everyone. My name is Seun Alley. I am the CEO and co-founder of Fez Delivery Co. Fez is a last-mile logistic company leveraging technology for scale and efficiency. We currently operate in Nigeria and the United Kingdom. And I'm happy to be here.
All right. Hi, everyone. My name is Nubi. That's N-U-B-I. I lead startup programs at Paystack. Paystack is an online and in-person now payments company where we help businesses accept payments and also make payments as well. It's excited to be on the panel. I'm looking forward to the conversation.
Hi, everyone. My name is Christian. Christian Chami is my name. I'm on the commercial team here at Smile. Basically, Smile Identity, Smile ID is an identity verification company. We currently operate in multiple countries across Africa. We provide everything around, KYC, anti-money laundering, fraud detection, and facial verification and recognition solution. So I'm glad to be here as well. Thank you.
Fantastic.
Hi everyone, my name is Victor Alade and I'm the CEO and co-founder of Raenest. And at Raenest, we have businesses and startups in Africa to seamlessly manage their global receivable and expenses. What we practically does is we give USD bank accounts, EUR bank account, and GBP bank accounts to businesses and startups in Africa so that they can use payment faster and cheaper from their customers globally.
Wonderful. So fantastically, we have a panel that operates across Africa as well as the rest of the world, having been domiciled or HQ'd. And so let's kick off with the key factors that businesses need to actually consider when expanding operations within the continent of Africa. Nubi, maybe you can kick us off with a few points.
Expansion is a very difficult thing. It's not always as easy as people think, as like just launching a new country. There are a lot of dynamics involved from the macro to the micro. So think about like regulatory landscape, think about how people pay in said markets. But I think for me, I think at least at Paystack, the philosophy that we think about is this the right time and do we have what it takes to actually expand into those markets? And so that helps just frame, looking at, okay, do you have the right resources? Because again, going to a new market, do you have the right team, context, knowledge, partners? And is it this right time? So is it more of a tailwind versus headwinds from a regulatory landscape, partnerships, and all? So it's a lot of like factors involved. But I think that's a good kind of like model of a question to just always ask across the team. Is this the right time? And do we have what it takes to actually go do this? And I think that would help in expanding in a good way.
And of course, speaking of timing, one of the most pressing factors must be regulation, right? In terms of what the regulatory landscape is saying, whether you're in fintech, whether you're in logistics. And so, Seun, what about you? How does the regulatory landscape in particular impact some of the decisions around expansion and strategy?
So the answer is, it's very obvious. It's very critical. And when you look at the regulatory landscape, you're looking at different elements from taxation policies to even the legal framework side of things as well. You also have to consider, take it a little, political instability as well. And a critical case in point can be Nigeria with a lot of activities that happened last year. We had an election, we had a new government, and there were lots of policy changes. that took place in that same year, and this must have impacted lots of businesses as well. So it's very important that as businesses looking to expand, you look at the regulatory framework in those countries that you intend to expand to, and try to navigate the complexities try to navigate the complexities and ensure that you're complying at the end of the day, because you don't want to be, ignorance is not an excuse, because, there's the popular saying that fintechs would typically move faster than regulators. But if you carry out your research, like Nubi had mentioned, maybe ensure that you investigate and be sure that you should be going to a particular country. Maybe then you get away with some things. But while also doing that, it's very important to assess the risk and the opportunities as well. Is it really worth it? If I compare the regulatory regulations in a particular country vis-a-vis the risk embedded in moving to those countries and the opportunities available, is it really worth it? If it is worth it, then, if the opportunities are bigger than the risk, or the risk are things that you can, you can put a few things in place to surmount or to overcome or to mitigate, then why not?
Mm-hmm. Yeah, makes perfect sense. And actually, Christian, obviously you're in the payment method space as well as compliance. So what do geopolitical considerations mean for you when you're navigating these spaces, and how should others be thinking about that as well?
Yeah, so for us, for each country, there's each country has come up with certain regulations and guidelines for business operations, and how business operates in that country, how they employ people, be it getting licenses or you trying to, or in fact, sometimes even specific regulations for different sectors of the industry in that organization. Now, as you're looking at expanding, you need to be aware of all of those compliance requirements, so that you don't get burnt. Now, aside that, you also, like Seun mentioned, you also have political instability. Usually changing governments can also affect the framework of how the business will operate in that country. Then we have things like market entry barriers, and you want to ensure some regulations or regulation in a certain country makes it difficult for people to get access to those countries. So you have maybe you have to think about how to maybe you have high rate set up and different other things. Then also there's the issue around data privacy and policy. Now a lot of countries in Africa are beginning to set data privacy and policy laws that ensures data protection for people in that country and all that. So as business that's are expanding into all of these countries, you need to be aware of all of those things so that you don't don't have legal issues and you stay compliant and safe.
Fantastic. And actually, in practice, Victor, I know your voice is going, so we'll try and keep it succinct, but how have you navigated these challenges, especially with cross-border payment?
So one of the main challenges with expansion is that it introduces complexity to a company financial operation. Let's look at the business that is only operating in Nigeria. They only have to do with Naira. Now they expand to Kenya, expand to US. They have to manage 3 currencies, USD, Kenya shillings, and Naira. Then they now have to look for how they can manage conversion and other FX headache, which is very difficult to deal with. One approach which we've seen companies using, and that's what Raenest is good at, is the multi-currency bank account, where you don't have to travel to US to set up a bank account, come to Kenya, set up a Kenya bank account, set up bank accounts in Nigeria. With just a single sign-up, you have access to 5 bank accounts that are local in each country you are operating in. So you sign up, you have a US bank account, Nigerian bank account, Kenya shillings bank account, which can make it easier for them to manage their receivables and then to manage FX. I think this is one approach that has been working effectively. One advantages of that is it make it easier for the payment to be faster too, because each bank account is operating on the local network in that country. Nigeria, for instance, if you are using a Nigerian bank account, it will be operating on NIP, meaning is a payment within Nigeria is faster. If you need to receive payment from US, you already have a US bank account which you can give to your customer in US. It will make the payment be faster, and then the fee associated with it will be faster.
Lovely, lovely. And so let's then talk about opportunities and challenges associated with going to other continents, right? Maybe, Nubi, maybe you can kick us off with that in terms of how then people should be thinking about those movements.
Yeah. So I think going into new markets, like I said at the start, is a good framework. Is again, do you have what it takes? Is it the right time? Do you have the resources and all? But I think there are cultural and market differences as well for one to factor in. We work in payments. Before we take the very first charge in a country, it could take a year or two. And the reason for that is that there's a lot of pre-work, working with regulators, working with partners in the market, be it financial institutions like banks, the popular rails as well in the markets as well. Like in Kenya, for example, it would have made sense if we had said, oh, we're in Kenya, but you can only pay with cards. I mean, people would be like, are you serious? Like, maybe come back when you're really ready.
Yeah.
And so having M-Pesa and working with Safaricom to actually integrate was quite key. So I think, again, it's just quite critical to, again, work with regulators, partners in the markets. I think it's always important to also think about the nuances in the culture as well. How do people pay? Who does the paying? I think even things like the costs that it takes to actually serve that market as well, to help with things around pricing, how we price, for example, in Nigeria for our payment methods that are quite more bank-led, like bank transfers and all, compared to an M-Pesa payments method versus, say, mobile money. You have to factor all of those things in as you think about, again, expansion. So I think it's really down to, again, just all of these factors and look at, okay, what are the cultural differences, what are the market differences, and it's very important not to fall into the bias of thinking, oh, I've expanded to one market, I'm just going to take all those lessons and go to the next market and think, oh, I've done it before. Markets are very different, nuances are very different, partners are very different, even if they're similar in nature. Working with one bank, even if it's the same name in one country, with that same bank in another country is very, very different. So I think just being ready to be very adaptive to partners and just be able to move into a certain market and ask those questions before you do so will be really key.
So there's a relatively clear playbook, but the actual execution really depends place by place, organization by organization.
Yeah, it's best to go in with a blank slate. I mean, as for Paystack, we never say we're live in the market, hey, we're here. It's always a pilot first, and the reason why we do that is because it affords us the chance to really go deep and learn a lot with early adopters, stress test the systems, and payments where it's really not just a transaction. There's a payment system and there's a post, talk about refunds and chargebacks and all. Like, so it's really, really unique for each market. And so you're right, like it's really about going in with a blank slate. Of course, there are like lessons you could bring along. There's muscles you've built. You can centralize some things as well. But I think just being open-minded and just, again, being okay, how do I work with the best partners, with the best players, with the best set of users at the initial entry to then, again, make it work.
And of course, there are then risks associated that sit outside of those partners, such as like exchange rates, right? Devaluation, all of these problems that are happening. How can businesses mitigate these risks, right? And I think everyone has something to say about that on the panel. Anyone can pick up.
I can share my experience with Fez. So last year, going into the new year, we had like an exchange rate that we worked with. So we had made projections based on that and said, CBN is doing 450. If it gets worse before the end of the year, we'll probably be somewhere around 500 naira or 600 naira to $1. And May 29 comes, and we went from 450 to 760 overnight. And I think within 4 weeks thereafter, we went to 1,000. So that's about, so if you made projections and said we should be doing about $1 million, when in January, it means that was cut down to like a 450K media, and you've got investors like we do at Fez. So what we did, and we had, it was a risk that we saw, and we only made maybe some adjustments, maybe by 30% at the at the beginning of the year, and then everything comes, and you needed to start thinking how to boost your revenue by maybe somewhere around 300%. Well, nothing prepares you for that. However, what we did at first was to think of how to start earning in FX. We are a very localized company. We do logistics. People pay us maybe $1, $2, $4 to move items around Nigeria, but they pay you in Naira. So, you're not going to then go back to your customers and tell them, you need to start paying me in dollars now because of my current realities. It's not your business, like Nubi had said. So, what we did was then to look at, identify countries that could be quick wins for us, where we can easily expand to and make FX. US, we have 3 countries on our radar: United States, Canada, and UK. From Nigeria, we'll need to fly about 14 hours to the United States and probably 14 to 16 hours to Canada. For UK, you just need 6 hours. I'm like, I'm going to UK. Whatever it is, let's go scout the market, see what options are available to us, what kind of markets are available to us as well. And we could already tell from our localized experience that we saw that there were a couple of Nigerians who preferred to shop in the UK, and they need a partner to deliver to them doorsteps. We approached a few of them and said, we're going to pilot with you, but are you willing to pay us in dollars? In pounds. And they said yes. So we launched, and it felt like, okay, we now have another revenue stream of income, and we are earning in FX, and it can act like as a buffer for whatever crisis that we would face in Naira. Then we hit another roadblock where people are now telling you, we do not want to pay in pounds anymore. You can't blame them because the inflation is hitting everyone, and we now have to start looking for partners who can bill them in pounds, have them pay in Naira, and remit GBP to us. And I think we found Raenest is doing that for us. It's a lot of complexities. How do you mitigate them? Sometimes the truth is, as a founder, there are no mitigants. It just comes to you, and you just have to deal with it and fix it. But some of the ways that you probably want to look at is also looking at quick wins, places that can give you like a buffer, and where quick wins simply, not like we're not considering moving, going to the US or Canada as well, but UK was like the fastest option to success for us. I don't know if that helps.
Yeah, I think that should.
I'll just share 3 quick things and I'll pass it on. So I think you're spot on. I'm kind of like privileged in my role at Paystack to talk to a lot of startups, and I was even very happy when Seun reached out and said, "Oh, we're now in the UK," and I'm like, "Okay, I definitely get the motivation as to why you don't want to do that this early." But yes, like from what I'm seeing across the number of startups that we manage, 3 things come to mind. For those that have raised capital in dollars, they try to raise local debt, so debt in Naira, and then collateralize the dollars that they have in the States, in Delaware. So it's okay, I have raised $1 million, I'm going to just borrow $1 billion in working capital. And that's even one of the products that we just had currently piloting at Paystack as well in Nigeria, in extending working capital to startups. So that's the first thing I've seen. Second thing is actually, again, like you said, diversifying your currency within Africa itself. So you see people saying, okay, maybe I just go to Kenya. Not all inflations are equal, so let's see how we can just again edge ourselves within the continent. So if KES goes up today and Naira goes down, we can actually just again move things around. And so people actually again try to have revenues in Naira, Kenya shillings, Rwandan francs, as well as even in South Africa as well. So that was fine within, and then of course the big one is got FX as well. So how do you start earning FX revenue? I've seen people that even like launch new lines of business. So maybe they were into this pure local thing. They're like, oh, let's launch a SaaS on top of what we have. and just build like global access. If you want to pay me $2 a month or something, that's still something. So I think just finding new ways to just again attract foreign currency. So that are the ways we're saying at least startups actually react and mitigate that risk.
Yeah, so I think this is part of geographical and geopolitical instability in certain countries, where, like Seun mentioned, sometimes you're never prepared for these things. They happen overnight, and you just have to quickly think of a way to get out of this. I think one way we handled this at Smile was we try to then, kind of focus and concentrate on, different parts of Africa, aside from, let's say, Nigeria. So basically, that kind of helped mitigate, the inflation rates in. So you basically not just earning in naira, you're also earning in other currency. Like Nubi mentioned as well, inflation differs from different countries. So I think that's one way we did that to help us, to be able to stabilize a bit.
Right. With the fast deposition.
I mean, Raenest, you guys you're holding all the currencies now, so it's just you're swapping between the currencies.
So with the fast depreciations of many African currencies against USD, like two approaches we've noticed with startups that they're doing. One is expansion outside Africa, which is what she mentions. The other one we've noticed people are doing auto conversion, where they are billing their customers in naira, but when the naira is coming, it's being converted to dollar or any other foreign currency. And we've seen an increase in the number of people making use of our invoicing solutions because it gives you that ability that you can bill them in naira. Then when the funds comes in, we automatically convert it to dollar, because today, dollar to naira might be 152, tomorrow it might be 1570. So it's better you convert to a stable currency instantly. But for us at Raenest, we started the one by majority of our revenue has been in foreign currency, USD, GBP, and Euro. So it has less impact on us, but we've been able to help other businesses to navigate it seamlessly as well. And then we've seen increased number of businesses signing up just to make use of our multi-currency bank accounts so that they can bill in different currencies as well.
Yeah. I mean, it seems like everyone fundamentally has to just think about what could happen, what's already happened, and prepare for the worst, enjoy the best. So let's talk then about how trade agreements and economic partnerships within Africa help to influence expansion strategies as well, because again, it's that broader macro environment that fundamentally has to motivate people to move smart. Christian, maybe you want to kick us off?
Yeah, I think trade agreement is a great thing. It kind of, bring organizations together to partner, to have partnership. And then again, it's harmonized and standardized business operation within certain regulation, certain jurisdictions and areas. So it makes the entry barrier to be very easy. You don't have to struggle to maybe register or create register a business in that specific country, and it gives business the ability to look forward to expand into those other regions. And also for data sharing and all that, it makes it easy for them to be able to, onboard customers across, different regions in those countries, because again, there are no regulations or strict regulations that is limiting the ability to acquire customer in a different country or in a different state and all that. So I think it's a great thing if, initiated in specific region and all that. It simply ensure that market entry is easy, accessible, and it's foster a lot of partnership amongst the participating countries.
Mm-hmm. Yeah, completely agree. So then, how maybe Nubi you can, because you've worked across a lot of different markets in particular, how do businesses ensure that those strategies actually align with local regulations and compliance, and in a good and timely manner as well, because we're doing business?
Yeah, I think it was it Mike Tyson that said everybody has a plan until they get into the ring and they get punched in the face and all. I think it's I'm looking at some of my colleagues in front here on the Kenyan team, and I'm very sure when they're very happy day one, we're going into Kenya, we're going to go take over, and was boom. But yeah, they go back up and going and still at it. But I think it takes a lot of resilience. But just again, that's mindset that this is a marathon, it's not a sprint.
Mm-hmm.
You need a lot of stamina to engage with regulators, with partners across different phases, from compliance to just even product, making the things work as they should. And then, of course, getting people to actually use the product, get feedback and all. So I think really just that early engagement. Like I said, we're live in Kenya now, but that took a year or two to get things going. So if you look at all of our markets, like we try to at least go super early in Rwanda as well, go super early with regulators, learn as much as you can. I think there's a place of the ecosystem as well to this. No one is an island. So learning from, again, those who've been there, done that, partnership, exploring partnership as well. Leveraging people who've built infrastructure as well, rather than, again, trying to go at it alone. I think that's quite key. I think another thing that comes to mind is like, so let's go beyond payments now. I mean, of course, when you go into a new market, you need to like hire people, you need to do all kind of stuff. I think, again, exploring partnerships as a way to go. Think about like an employer of records, and even like matches of record, like Raenest and all. Smile ID could help you go into many markets as well. So how do you just, again, hit the ground running, but working with those who would help you do it compliantly as well? So they've figured out, okay, this is what you do to taxes, what you do with your audits and all, just, again, that's all been abstracted. So how do you work with really good partners that help you stay compliant as you go into those markets? I would say, like, nothing beats being on the ground as well. Like, it's people try to launch markets from afar off. I'm very sure, again, looking at some of my teams here, they were pulling their hairs out. Even Nigerians are saying, oh, guys, why can't you just do this? And when the Nigerian comes, you're like, oh, wow, that's what you mean. And so I think being on the ground helps build empathy, helps really understand the needs, how to actually, again, like what expectations are, and not just, again, misguided. And I'll say, again, from a regulated, at least for fintechs, exploring sandboxes could also be a way to go.
Yeah.
People try to just go to market. I have this idea, I'm going to just go to market. Sandboxes are there to allow you to test very innovative things that don't have clear controls. And so, again, trying to work with, and I know in Kenya, very active sandbox. Nigeria is trying to do the same thing in South Africa. So if you're a fintech, exploring sandboxes as well as a way to go to market, and stay in the compliance, and nobody's bringing the hammer upon what you've built. I think that's one way to think about things as well. And then the last thing I'll just say is, again, talk to the experts. At Paystack, we have a team or a function called market intelligence.
Oh, nice.
And so we're very happy to always leverage that for startups who are thinking about expanding to new markets, or thinking, oh, how do I do this? Who should I talk to? People who have been there, they've done that. So can you just leverage those things as you go about building? So I think those are a few things just to help people do things the right way, because you don't want to go 1,000 miles and then be told, oh, sorry, that's not going to fly here.
You've got to go back home. You've touched on a lot of best practices, essentially, when it comes to thinking about moving forward, especially with when we talk about strategic partnerships, etc. Are there any other examples on the panel in ways in which people have approached that?
Yeah, I think I can see something here. So just like Nubi had mentioned, sometimes when you're going into new markets, you don't need to try to reinvent the wheel immediately.
Of course.
Look for organizations to partner with, and I'll use Smile ID as an example. Like we work with a lot of companies cut across different countries. We're already establishing multiple countries across Africa. So you don't need to come to Kenya, for example, to start trying to get access to IPRS or trying to build a KYC solution and all that. You already have people who are on ground, who are experts, who have been doing this for years and has done over 100 million verification. And you just plug and play and your business start moving. So sometimes, I think some of the things that affect businesses, they want to do too much. Take it one step at a time. Look for experts. Ensure that those experts are, people who are experienced in the field, and align your goals with theirs. Speak about value, agreement, and all that, and leverage on those opportunities and those partnerships rather than just trying to come and reinvent the wheel and start from the scratch. Sometimes it takes you years for you to get to that expertise, right? So yeah, I'll just say leverage on good partnership, and you will not have so much problems.
Yeah, and the key there is building trust, right?
Yes, so just to also add to that, And I mean, also leveraging speaking to our own experience. So in the UK, we do logistics, like I said. And at the core of that is using tech to enable it. However, for you to operate in the UK as like a threat partner, working directly with airlines, you need licenses. And like Christian rightly mentioned, getting those licenses could take you up to 5 years. So a country that had just been registered 2 months, and I mean, you think you have the balls to approach the government, no matter how much money you've got to spend, they're not going to oblige you. That's one. Two is expansion is expensive. I mean, every founder here will tell you that it is very expensive. So and that's why we are talking about assessing your risk and opportunities. Would you rather save some money and plug and play, you leveraging an existing license, save some money, invest those funds that you have in other resources like human capital, technology, and things like that. So yeah, we cannot even overemphasize the importance of strategic partnership. You can't do everything alone, first of all. It's very expensive to want to expand. I mean, even if you have all the money, investors are going to start asking you questions for those of us that have investors. So I think it's very, very important to identify partners who have been there, done that. They have great track record of success, and just work with them for a very short period of time. It could even be long term, and I mean, as long as you're hitting your KPIs, I think you'll be good.
Fantastic.
Acceptability is a major challenge when it comes to expansion. People know you to be a Nigerian company, and then you expanded to Kenya. So how will you get users in Kenya to believe in your products and start using you? And that's a place where partnership could help. Look for a local company. That's why not. Partner with them, announce it. It will help you gain trust in that new country. I think that's one approach that has been working for some companies. We've seen that they've expanded drastically into other countries. And when we also look at expansion from in an perspective of a license as well, right? You are going to a new market. You don't know, maybe you will be able to succeed in that new market fully. You don't want to spend on license, which could be so expensive. Partner with the license partner, and then use that to see how can we generate revenue. If the market is big enough for you, then you can spend on license as well. One approach we like using at Raenest as well is partial rollout. When we launch in a new country, really make it available to some set of users. Mm-hmm. We test with those users, check their behavior, we iterate, we see what we need to change, ensure everything is working as expected before we make it available to other users. So that will ensure that when you launch fully, your system is working perfectly, you've solved all the challenges.
Yeah. Each different market has its own set of practices, essentially. So we will actually open up to questions after from the audience after these final couple of questions, actually, because the last one actually goes back to you, Victor, in terms of the availability of different payment options. Obviously, you've talked about partnering with those in other markets, but how does that also impact consumer behavior and market penetration when you're talking about new regions? Oh, I don't know if the mic is on.
Going to a new market, one major challenge we face is making users in that country to be comfortable. Then you are trying to partner. You also need to look at who you are partnering with. Will they end up hindering your growth? Can they snatch your customers? So you need to ensure whoever you're partnering with is a well-established partnership, that the partnership is in a way that is a mutual benefit. You can help them grow, they can help you grow. So you leverage on each other to achieve that. Then with time, when people start enjoying your product, you can decide to move away from them, move to another partners. I think that's something that I think it has worked for us as well. Like if we want to do payout in Kenya and we say we want to connect directly to the bank, it might take 6 months to 1 year before you do due diligence with the bank, take it to Kenya, Central Bank for approval. Why not look for a fintech that is just local in Kenya and they are good in Kenya payouts? Plug into them, let them do the Kenya payout for you. Maybe after 1 year, you know that you are now big. Okay, I want to reduce my cost of sales. let me connect directly. As at that time, you have resources. You have users that are ready to like use you. So you start by penetrating little, and then when you've got it to a stage where in that new country you have your product marketing fit, have your messaging marketing fit, meaning the tones you are using for communicating with users in Nigeria is not the same you will use in Kenya. So it might take a while before you find the right tone. After getting that, you can ask, there is an idea that without you sitting down, you can stretch your leg, you will fall. So ensure you sit down first, you are comfortable, then you can start spreading out.
Fantastic. And I think just a final question to the entire panel before we go on to audience questions, because one of the most impactful opportunities is sharing the stories and that highlighting the things that have worked. And so for all of you, what lessons can be learned from the successful African businesses, obviously Paystack is one of them, that have expanded globally, particularly, I guess, around payments and market adaptation?
So I can go first. So
Fantastic.
I think one of the things that, again, from our own experience is very important is the ability to build trust. And I think, every panel session today has had to speak to that. And I think even everyone on this panel as well. So people want to, if you're new, relatively new in a particular country, people want to be able to trust you to do business with you. So one of the ways that you want to build that trust is localizing payment options, for instance. Which was one of the things that we started, and we had to take it back. And that's because the idea of launching in the UK was just to generate FX. And that was what we were working with. And until customer says, oh, we're not going to use you because we don't have options. So, and because we don't even know you, we've not done business with you. We want to be able to pay you in other currencies and all of that, especially Naira. So I think it's very important for us to build trust, and we can leverage technology to do that by giving them visibility into what is being done. For us at Fez, for instance, we've got for businesses, we've got dashboard and APIs. For individuals, we've got mobile applications and web applications that shows you that gives you access. It gives you the access to view how your transactions are moving from the stage point where you place an order to the point where the order is being delivered or returned. So that kind of gives customers some level of confidence to say, okay, looks like these people are legit and they know what they're doing. To build trust, leverage technology. And secondly, I think it's also very important that we're still very agile and are able to adapt. We've also mentioned that on this panel. I think I'll stop there so that others can.
All right, so I'll go here. So for me, from our perspective in terms of KYC perspective, what we've seen for the most successful businesses is, one, they're innovative. Mm-hmm. Two, they go beyond compliance requirements to ensure they continue to build trust and maintain and not have dent on their images, right? Three, they accept and they use technology. Like I mentioned earlier, they don't always try to reinvent the wheel, and they embrace technology, they embrace partnership, and I think finally they use Smile Identity for their KYC needs. You can ask Raenest, you can ask Paystack.
Fantastic.
Yeah.
Having a local phase where you're operating is very important, but you can be operating in Kenya and not your team are in London. No, nobody is on ground. So it's important to have a local phase, and that can actually start from your email, right? If you're in Kenya, use a name that's common in Kenya, that they can be familiar with. It's still down to localization. Mm-hmm. So like I was in Nigeria, we use Bella to my message. In Kenya, we use a different name. So that they can see your products as their own and not as a foreign product. I think that's something I've seen with several companies that have expanded into different regions. They can have head of expansion Kenya. They are not just creating that because they like the title. No, but they want people from Kenya to say that, oh, the head of Paystack is a Kenya. based in Nairobi. That's a key thing. Yeah.
Yeah, I'll close with just three things that, again, I've seen across board from those that have done this well. And I'll count Paystack. I mean, 7 countries is not easy feat. But I think the first one I would say is partnerships. We all know the African proverb, you want to go far, you go alone, and it does take a village. And so just again, choosing the right partners. And when I say the right partner, I mean that you have set the standard and you're getting partners that help you deliver on that standard, not chip away from that. So that's one. The second one is actually going deep first. It took us almost half a decade for us to go from Nigeria to our next market. There's always this sense of urgency, whether it's for VC appeal, I don't know, but people want to go from 1 to 3 markets just like that. But I think there's a place of needing to go deep in the markets that you're in. I mean, always test out things and all, but again, you don't want to just say we're everywhere and the quality is really not standardized or not really the same. You want to be everywhere and really be everywhere that you can be usable. So going deep in the markets, again, we wouldn't have gone like public in Kenya if we had no M-Pesa. Same thing in Ghana without mobile money. So really going deep as far as product is concerned, and again, just again going as deep as you can before, then going wide and maintaining the standards that you've had in your own market is very key. And then the last thing I would say is just always be talking to customers. You're not in business if you have no customers. It's all for nothing. So many people, as we scale and expand, countries start to become numbers and places, and we lose sight as to like why we're doing this in the first place. So you can never grow too big that you can't actually like know what's happening with your customer. And one thing I try to do when I come into new market, even on this visit, I've tried to visit at least 1 or 2 startups in their offices and just hear from them and see how they do what they do and the challenges that they face, because the little magic you start exposing things that you didn't even think about from a product roadmap and things like that. Oh, we need this, we needed that. Recurring payments in Nigeria was because, again, people were pushing and building business models that needed that, and we had to build that for that. So I think never run away. You're never too big as you expand into new markets to not talk to customers. So always be talking to customers, and that will help guide your product expansion and your market expansion as well.
Indeed. So relationships, reputation, that partnership piece is fundamentally core to any expansion move across any continent. Yeah. Wonderful. So we now have time for about maybe 1 or 2 questions from the audience, if anyone has. I think we got a question at the front. Don't know if there's a microphone somewhere. Wonderful.
Thank you, panelists. So real quick, we've touched on partnerships as like very core to expanding in countries, right? Like you all have rightly mentioned, plug and play. So my question is, how do you price effectively, right, for customer adoption?
Right. So
how do you price effective for customer adoption? So I think I think it was on the panel yesterday, because we had a similar panel like this at Antler on just expansion. And one thing I found interesting was someone saying things like, oh, you can even give the products at a discount, and then really just get people in. And then when they adopt the product, you could start to engage and see what pricing works. I think there's no one answer fits all. I think there could be comparative just analysis. Okay, what else is the competition or the alternative charging? What would it cost you for this? There's also lots of the margin play. It costs me to deliver this. I'm going to just add the markup on top of it, and then I'm in business. So I think there are different ways to go about it. One thing just to consider, though, is like you might need to avoid just copy and pasting pricing from one market to the other. Spotify, Netflix in Nigeria is not the same thing in San Francisco. Euroco is not the same price in US and Nigeria. So I think you have to just find ways to also factor in the social economic angle as well. Like what is the purchasing power for this market? Are people willing to pay for this? But yeah, there are different models that one could explore as to like how you think about pricing in the markets that we're going to. For us at Paystack, it's purely from cost of delivery of service and then adding a margin or a markup that is our margins, yeah.
I
Also
could
think,
also, okay.
I also think with time, you can optimize your price, right? Nubi mentioned about competitors. Depending on your product, where your competitors in that new market. Let's look at DSTV, for instance, in Nigeria. They can easily raise their price because the competitor they have, they are kind of superior to them. And if they increase their pricing, you have no other option than to go with them. But let's look at our mobile network, MTN, Glo, and the rest. If MTN decides to just increase their price, and they have what the competitor that can take them up. So that's a factor to put into consideration. Entry into a new market, it also depends on your strategy. What are the strategy you want to use in moving customer from your competitor to you? Pricing might be one of it. Probably you might start with a discount, and then you use pricing as your own unique point that, oh, if competitor is charging $5, we are charging you $2. And then with time, when you know that you've successfully gained people trust, you can now start optimizing your pricing, talk to your customers, and see where you can arrive at the pricing where you are not losing and your customers are happy as well. Cost of sales in each country varies, so you need to put that into consideration as well, not to burn too much money when trying to expand into new markets.
I'll do a quick plug for Smile ID and Paystack here. So just back on what you just said about pricing discount. So if you're a startup in the room, we've got credits on both Paystack and Smile ID. So we get you in, you test the products, you love it, and then we turn on billing afterwards. So yeah, you're right.
He's still going to pay. Has it you done? Wonderful. We might have time for one more question if anyone has anything pressing. No. So with that said, I want to thank everyone on our panel for sharing their insights and their advice as well, and wish you all a great afternoon.
Thank you.
Thank you.